because I think, as I said earlier, we're in the beginnings of a pretty exciting move, and this move I think is going to make the prior move back that we saw, from 2010 to 2012, look small, in my opinion.
Are you tired of overpaying for your gold, silver, and platinum bullion coins and bars? Then visit sdbullion.com today. SD Bullion was recently named the 177th fastest growing company in the United States by Inc. magazine. This is because they offer the absolute lowest prices in the industry and follow up with over-the-top customer service. So what are you waiting for? Go to sdbullion.com today and join more than 60,000 happy investors that save money on every precious metals purchase they make.
Hey everyone, this is Elijah Johnson with SilverDoctors.com, and back with us today is the CEO of First Majestic Silver, Keith Neumeyer. Keith, thank you so much for your time today.
Elijah, good chatting again.
All right, now 2018 ended the year for the stock market as the worst year since 2008. So I know you have previously talked about how eventually you're expecting a shift from stocks into precious metals. Are we seeing the beginning of that right now?
Well, that's a million-dollar question, isn't it? Unfortunately, we can only look backwards at such things. So, the verdict is still out. It's still too early to put a pin on, the point in time where we're currently at in the cycle. I contend that the new bull market in the resource sector started in January of 2016. And from January 2016 to July of 2016, we saw, anywhere from a 3 or 4 or 500% move in some of these mining, and then of course many, many others. And that was on a relatively modest move in the metals, whereby we saw, silver go from the mid $13 range to just under $21. It didn't stay there very long, mind you, but it did in fact move about $7 over a 6-month period. And gold went up, a couple $100. I think it got up to about $13.50 at that time, and the stocks just exploded. But then we went into this, kind of bull market correction. And then all of a sudden, the big tech stocks take off and kind of took the bubble away from the mining sector. But it appears to be back. What it looks like to me is a repeat of 2000, 2001. When the Nasdaq hit its record high of about 5,000 or just north of 5,000 in March of 2000. And then over the next couple of years, the Nasdaq corrected by 80%, and that was the beginning of the new bull market, or the old bull market, that went over a 10-year period from 2002 to 2012. I think we're already there. I think we're probably in maybe the second inning of the next 5 to 10-year bull market. But, of course, time will tell.
And what is your perspective on how gold and silver have held up in the face of the stock market decline last year?
Silver has been a real lagger. It's been, a little bit disappointing to me personally. Obviously being a CEO of a silver company, it's been pretty tough. We took out, our largest acquisition ever in the history of the company, the San Dimas mine in May of 2018, which doubled the size of the company. And you would think the stock would double, of course, but of course it didn't do that. But we are now twice the size as the silver producers we were before that transaction occurred. And then, we're set up very nicely for the future. But, at $14, $15 silver, it's a pretty difficult environment to survive in. I think we're doing a pretty good job, but nevertheless, it's not been easy. But I'm optimistic. First Mining and First Majestic are both well positioned for the next run, which as I said, I think it's started already.
Now, some people are looking for a continued stock market decline in 2019. Now, if we look back at what happened in 2008, precious metal did not fare well at the beginning of that crash. What do you see? It seems like you're still very bullish for precious metals. So I guess first question is, are you looking for a continued decline, and how will gold and silver hold up?
Yeah, if we look, I don't have a crystal ball, so, it's a bit of a guessing game at this point. But, just looking back at history, that was 2008, the financial crisis, there was a sell everything type of mentality where, it was a huge liquidity crisis, and no matter what you had to sell it for whatever reason. And that included, of course, gold and silver and real estate and everything else, the kitchen sink. I don't think we're going to see a similar type of move this time around. I think it's a different type of environment. Where there is, well, of course, a lot of more debt out there. There's a lot more currency floating around. So maybe there will be some kind of financial crisis, but those are almost impossible to predict as far as I'm concerned. I think we're just going to see a rotation. I think this is going to be more like 2000, 2001, 2002 versus 2008, 2009, where, over a couple year period, we saw a transition from, the internet stocks, the tech stocks, as we call them today, but back in 2000, 2001, the Y2K stocks, the internet stocks, were all getting sold because the valuation just got so far out of hand. And of course, don't forget about fuel cell stocks. There was a lot of fever pitch in the market back then, and it was a slow unwind that took place over a couple of years, and the market woke up and started coming into the metals, and as I think they're doing right now. And the next thing you know, you're a couple of years in, and the market's up a couple 100%, and I think that's this kind of slow moving kind of gyration type market is going to be in front of us for the next couple of years.
And in the midst of all this, as we see the economy possibly slowing, what is your perspective on how the Fed will react to the slowing economy? Because I know last time we had you on about 2 months ago, you were talking about how the Fed might get a bit more dovish. We've seen a bit more dovish language coming out of the Fed. We saw a rate hike in December, but they're expecting only about 2 rate hikes in 2019. What do you expect the Fed to do?
Yeah, I've been talking down rates for a while now, and this whole move up, north of 3%, which lasted just a few weeks on the 10-year bond. Everyone was predicting 4%, 4.5%. I was seeing out there by some analysts, and quite honestly, I don't know why they were thinking that, and maybe I'm wrong. Maybe my feeling that rates are going to go back close to zero again is maybe as wrong as their opinion is that rates are going to 4 to 5%. But gold loves weak dollar. It loves low rates and I mean real rates. So inflation. So you can have increasing rates and increasing inflation and have flat or dropping real rates. And that's, when I talk about interest rates, generally that's what I'm really referring to. But everyone's got their eye on, the 10-year bond, the 10-year treasury, which is now somewhere around, 2.8 or something like that. And, quite honestly, I think it's going to be testing its lows over the next year. And that's going to be super supportive for gold and probably, not bad for the stock market as well, because I think that's going to help, keep the whole overall stock market alive.
No, I've heard some people say that if there is another crisis coming soon, that the Fed doesn't have much room to lower rates. It's not like the situation we saw in 2008 when rates were, like 5% and they could lower them to 0. We only have about 2.5% of wiggle room there. So if we do see another crisis, I mean, what do you see the Fed doing? Do you see it resorting to more quantitative easing? What do you think they're going to do?
Maybe they'll go buy some gold. I don't know. It's there's a limit. I think the whole system's reaching a limit. There's lots of pundits out there that I respect and I listen to and talk to, and everyone's got the same question in the back of their head. How far can these these markets go without being checked, and how high can the debts go without the market waking up, realizing that the debts can never be paid back, and then there has to be some kind of reset in the future. And what does that reset look like? And then how does that affect overall markets? How does that affect the price of gold and silver? How does that affect our lives? And these are all extremely legitimate questions and questions I ask myself on a regular basis, and I don't have the answers. I don't think anyone really does have the answers. We just simply don't know. But I know as a fundamental investor, and I have for my career of over 35 years of investing in solid assets, and that's gold and silver. And I think you've got to have your assets in these metals, whatever form that may be. Some people prefer physical metals, and that's fine. It's a much safer thing to own, rather than mining stocks, which tend to be pretty speculative and sometimes darn risky as well. And timing is key for these things. If I'm right that this is the beginning of a new bull cycle that could last multi-years, then this is a fantastic time to be picking up some of these beaten up mining equities. But we just simply don't know. We're going to have to look back a year from now, 2 years from now, and either be kicking ourselves on our butt, saying, "Geez, I wish we bought more," or maybe shaking our head that I'll touch wood that we actually participated at all. But I'll go for the my first bet on that, because I think, as I said earlier, we're in the beginnings of a pretty exciting move, and this move I think is going to make the prior move back that we saw from 2010 to 2012 look small, in my opinion.
Regarding the mining sector, can you give us an update on some of the new developments you see? Because I know last time we had you on, you were talking about how the mining sector is going through an interesting change. A lot of young people are coming into the mining sector and new technologies are being brought in. Are there any latest developments you have insight to?
Well, sure. I just got back from Austria just a couple months ago in the summer. Well, it's still the summer. But it's pretty interesting because I saw a technology there that we just recently purchased. These are high-intensity cylindrical milling systems, and the technology itself is not particularly new. It's just it's been developed and refined over the last couple of decades by a couple of companies who are really embrace this technology and have modified it somewhat for the mining sector. And the mining sector are now using this new grinding technology, and only a few companies, a handful of companies, are using it. A company that one of my predecessor companies, First Quantum Mineral, is one of the first installations of this technology, which is quite interesting. I had nothing to do with it, but it's just interesting that they were one of the four at the lead of this new technology, and also Nico Eagle, Goldcorp, Tech Cominco, Fresnillo. There's a couple, pretty respected, big miners that are embracing this technology. So we're on the list. We've got two of these machines on one's on the boat right now. It's coming over from Europe, and the other one will be following shortly thereafter. Then we've got a third one coming in early 2019, and these machines use less electricity. They're able to grind down to sub 50 microns, which is unheard of in the mining sector. And of course, if you can grind down to those kinds of particle sizes, you can get a lot more metal out of the rock that you're extracting through the milling process, which if you can get more metal for basically the same amount of investment or costs on an operating basis, your cost per ounce drop and your profitability, of course, goes up, and of course, your production goes up. So we're pretty excited about that. We're putting some micro bubbles in and a couple other operations. We're turning on a roasting system at Lincoln Tata, which is now in the early stages or middle stages of being brought online. Hopefully in the next couple of months, it'll be fully up and running. So, yeah, and you talk about young people. We have regular meetings internally about how we can bring in new talent and really get a lot of young people into this industry, because that's what this industry really needs. We saw the U.S. oil and gas industry, really pick up steam as a result of new technologies, through fracking, and U.S. is now one of the largest exporters of oil, which is quite unusual for them because they were an importer for as long as I've been alive, up until just recently. So that's quite an exciting change, and that's all technology based.
Definitely. And as we see, if you're expecting, silver to increase in price, what kind of new developments will you be able to make with First Majestic Silver?
Well, look, it's it all comes down to, investing in the right time and investing in development, investing in exploration are two very key components of the mining sector. These two key components, unfortunately, have been under strain due to the lower margins that the entire mining sector has been experiencing over the last couple of years. So we've actually reduced our development exploration projects as a result of decreased margins, which is a very unfortunate thing that we've had to do. We're not alone. Mining companies across the entire industry have had to do the same. So what ultimately happens, unfortunately, is that production starts to drop, because if you're not making that investment in development and exploration that's so critical to the miners, then production drops, which is exactly what we've been experiencing. We've seen lead, zinc, silver production, copper production dropping over the last couple of years, and it's got a direct relationship to the investment that's being made into these operations. So if we can adopt a technology like the milling system I referred to earlier, and even if the metal price stays exactly where it is today, and we could squeeze an extra couple of dollars out of our margins, we could reinvest that capital into the critical areas of the business. And despite the movement of the metal price, we don't need the metal price to go up in order to maintain our industry, maintain these mines, which is so critical. And this is why I brought it up in our last interview, because this is how important technology and innovation is to the mining sector, because the mining sector hasn't really changed for multi-decades, and it's going to be changing over the next decade. And it's all to do with these reduced margins that the miners have had to live with over the last 5 or 6 years. And we're doing things about it, and then we're being very proactive about it. Some miners aren't, but there's many good miners out there, like I think ourselves. I'd put First Majestic in that category, that are doing things in order to improve productivity, improve efficiencies, and bring profitability into our mines, and allow us to reinvest capital. And when the metals do go up, because we all know they're cyclical, and it seems like every few years they have major rallies, which I'm sure it's going to happen all over again in the next couple of years. Those years, of course, we reap the monstrous rewards of the lean years, where we actually deploy capital in efficient manners to take advantage of those great days that always do come.
All right. Well, Keith Neumeyer, thank you so much for your time today. Before we let you go, did you want to share with the viewers any last thoughts you had, and where they can learn more about your company?
Sure. Yeah. As I'm sure most of your listeners know, I'm the CEO, founder, president, and of First Majestic Silver Corp, New York listed website, just simply firstmajestic.com. And also the company I'm also founder and chairman of, a company called First Mining Gold, quite an exciting gold portfolio of assets, mostly in Eastern Canada. The website there is just firstmininggold.com. I'm on Twitter as well, Keith_Neumeyer. I don't do a heck of a lot, but feel free to look me up at any time. And if you have any questions specifically to do with either of the two companies, go to the websites. There's up-to-date PowerPoints on both companies. I highly recommend that you review those PowerPoints before making any decisions. And if you do care to get additional information, feel free to phone investor relations at either one of the two companies, and I'm sure they'll be very happy to assist anyone with any questions.
All right. Well, awesome. Keith Neumeyer, thank you so much for your time, and I hope you enjoy the rest of your holidays.
Thanks, Elijah. Nice talking to you, and Happy New Year.